Welcome to ShortView Trading, your morning market hit for Friday, October the 23rd. What matters today for traders? Well, so the key question out there today is, what are equity markets up to? Are they rolling? Are they consolidating? Or are they preparing for the next move higher? Certainly, if you look around the world outside the States, you'd come to the conclusion that not much is going on. If you look at the European index, for example, the main Euro Stoxx candlestick chart we're showing you in front of you now, it's basically gone sideways since June. We've edged back towards the bottom end of that range and interestingly found support at the 200-day moving average overnight, but really range bound since early June. Equally, if you look further afield over in Asia, look at China, one of the largest economies in the world, a major stock market. That equity index, the Shanghai Comp, one of their key equity market indices, also range bound over recent months, this time since mid-July. Equally, if you look in Korea, if you look in Australia, even Japan, it's a similar pattern. Markets over recent months have really gone pretty much sideways. So what's going on? Why the contrast with the States? And of course, one of the keys answers to that question is just look at what's been going on in currencies. The dollar's been weak over recent months. Yes, it's consolidated those losses in recent weeks, but broadly speaking, the trend has been down in the dollar pretty much since around May time. And we've seen strong currencies, of course, in other parts of the world. The flip side of that trade, the renminbi's been strong, the euro's been strong, the yen's been strong, the Aussie dollar's been strong, and so on. So their equity markets have had to contend with a currency headwind that's held them back and meant they've moved sideways rather than making major gains as we've seen in the S&P 500. And of course, much of the crux of that problem goes to what you see in terms of liquidity. And that's why we keep looking at Bitcoin, and we're interested in Bitcoin, because Bitcoin's a key liquidity indicator. Just like dollar weakness is telling you about plentiful liquidity, so is Bitcoin's strength. Now, and in the last few trading sessions we've been highlighting, Bitcoin has been surging to the upside. You can see that in the chart now, and there was further strength yesterday over the past 24 hours. That's what's so interesting about the S&P 500. Because of course a lot of the strength in the S&P 500 has been driven by liquidity. And the last time we saw Bitcoin surge to the upside, as we've seen in the last few trading sessions, the last time we saw that was back in mid-July. And that was followed by some fantastic strength in the S&P 500. And in fact, one of the best monthly returns in August this year that we've seen in the S&P over the last 10 years. So liquidity is key. Watching liquidity is key. It influences the equity markets. It determines currency direction and determines where you should be in which part of the global equity market, which country is more favorable. To see how we're playing this and for a full update on how our short-term market timing models are moving, please see today's daily RAG, available to subscribers via the website, or simply click on the link below to subscribe. So what are we watching today? Well, primarily flash PMIs that come out 2/3 of the way through the month and give you a quick take on economic activity in that month across many parts of the world. They're coming out over the course of today, Europe this morning and then the States this afternoon. Elsewhere, some continued earnings from the States with American Express amongst one or two others. On top of that, of course, anything on fiscal stimulus, any updates on the negotiations and how they're playing out. So that's it from us. That's your morning market hit for Friday, October the 23rd. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Twitter, LinkedIn and or Facebook. Thank you for listening. Trade well.